Geography, I think, is important to startups in a couple of ways. Now, one of the things that I've done research on actually suggests that in a lot of cases, the best geography or the best place for an entrepreneur to start is very specific to that entrepreneur. So it's not about the type of business that you're doing or about some places just being better for all startups. It's really about there being a kind of a fit between the entrepreneur and the place. And part of the reason that's true is that we know that social networks play a really important role at those early stages of the business. Entrepreneurs use social networks to get their first customers, oftentimes to find suppliers, to get the early employees that help them found the firm. And typically social networks are quite local. So if you go to a new place, you don't know who you might want to hire or who you should be working with. So typically entrepreneurs perform better if they start a business in a place that they've lived for a fairly long time. There are some places that seem to have more startups than others, and there's a few features that seem to be associated with places that are sort of more productive, particularly for high-tech startups. So one factor is having kind of an anchor university. Universities play a couple of roles. One is they oftentimes produce the technology that ends up getting commercialized by the startups within an area. Maybe even more important than that, they are like a production factory for talent. A second kind of piece of the puzzle is a community of venture capitalists, typically. So most startups in high-tech business require at least some funding. And venture capitalists typically only invest in companies that are located very close to their offices. Again, that seems to be a bit of a social network factor. The way they find out about entrepreneurs is by talking with people in their network and asking them if they know the entrepreneur. Is this somebody who seems like they can manage a company, who is honest, who they is going to be able to deliver on their vision? And it's really only in cases where they have those personal connections that they typically make investments. The third aspect is probably a little bit harder to define, and that is something about like a culture of being a startup. It's kind of interesting. If you go back to 1994, Annalise Saxenian wrote a book called Regional Advantage. And in it, she compares Boston to Silicon Valley. And Boston was her example of the sort of staid, traditional community that really didn't support startups. And Silicon Valley was, the dynamic sort of startup capital. I think you could almost think of these as all being necessary but not sufficient conditions, right? So it's very hard to have a thriving community if you don't have every one of them. If you really look at the same types of projects, high-tech projects that venture capitalists would be investing in, maybe crowdfunding as a whole is 1% of the dollars that are going into venture capital. So it's a small piece of the puzzle right now. But it does look like crowdfunding is enabling projects that are in different locations from venture capitalists. So if you look at where some of the successful campaigns on Kickstarter, Indiegogo have been arising, they've been coming out of places like Salt Lake City, Utah, and Boise, Idaho, places that do have engineers and some talent, but do not have local venture capital communities. Wrong to think of Kickstarter as entirely a substitute for venture capital, but it can be very useful, I think, at the early stages. So a lot of the campaigns are not that big. If you looked at the entire distribution of Kickstarter campaigns, 99% of them would be less than $100,000. When you start talking about $1 million, you're almost now in the top, 10th of 1%. But there are a number of successful campaigns, and that's often. And I think, if you think about what's valuable about a crowdfunding, I think a lot of times what's valuable out of these sites is it's just as much the information as the money. So if you looked at something like Tuckerman and Company, which would be a great, Yale SOM example, they had a successful Kickstarter campaign where essentially they pre-sold their first batch of shirts. So that was helpful because it gave them the capital to get started, but it was also helpful because it demonstrated to them that there was enough demand for this type of shirt at this price point that they had confidence to go forward. And when they started talking to investors, they could say, look, we had X many hundreds of individuals who were interested in ordering this type of shirt at $100 or $125 a shirt. And so they have demonstrated demand, which I think also helps them then get more traditional forms of capital. So I think this is a big question. It's one that we probably don't know a lot about. And the reason why is because it's very hard to do cross-national research, particularly on regulations. There's just so many things that are different across countries on a regulatory basis. So some research that's been done that's interesting is oftentimes within the US and making use of the fact that a lot of regulation within the US is the same, but there are certain features that vary on a state level. So an example of that is I've done a couple of papers looking at how the enforcement of non-compete agreements, which is a part of labor law. Labor law in the US is mostly governed at the state level, and so some states will enforce a non-compete agreement. So it's a contract and just a term in your employment contract saying that if you leave the company, or sometimes even if you're fired, that you won't then go to a competing company. So some states like Massachusetts actually would be one, New Hampshire, will enforce these clauses to different degrees. And other states like the state of Washington or California actually either have statutes that preclude the enforcement of them, or their court system has maybe a set of case law that basically means that they won't enforce non-compete agreements. It turns out that that seems to make a huge difference in a number of outcomes. So if you look at, for example, a country like Portugal or like France, those are countries in which when you start working for somebody, you're sort of in a probation period, and then after a period of time, maybe 2 years, you essentially get something like permanent employment. And so then the cost for you of starting a business or going to work for a new company becomes unbelievably high, because you're going from having sort of this guaranteed job back to probationary status. So I think some of what we think of as cultural may actually be generated by regulation, but I also think that there are real cultural effects. So this comes back to, if we think about the case of, say, Boston, here was a place that in the 1980s, early 1990s, didn't really have a very high level of entrepreneurship. And then all of a sudden, very quickly in the period of 10, 15 years, you had this kind of startup culture emerge. Now, if we looked at Cambridge, we would say that that's probably the number 2 area in the United States after Silicon Valley in terms of kind of the number of startups, number of venture-backed startups. So in a very short period of time, that area, Boston or Cambridge more specifically, really seemed to turn around. I think a lot of it has to do with, once a few ventures got started and people saw that that was a acceptable career path, that you could do that without, sort of finding yourself, on the unemployment line, then all of a sudden that created this sort of self-reinforcing dynamic. Okay, let's say that we have 3 different immigrant communities. Do you tend to see them all in their own sort of enclaves, living in different parts, or are they really connecting to each other? So if you think about this as similar to the literature on like infectious diseases, one of the things that you would expect is that ideas are going to travel faster and travel further in interconnected communities, right? Because very quickly the information moves from kind of one part to another, rather than staying sort of trapped in a little enclave. So we've been characterizing all of the cities in the United States according to their degree of integration, and looking then at how that affects essentially the effectiveness of venture capital, and finding that it actually has a pretty large effect even if you control for diversity. So if you hold constant the number of immigrants in a community, hold constant the ethnic groups that you see represented, the degree to which those individuals are interacting with each other on a day-to-day basis seems to have a big effect on whether or not the community is growing rapidly.